Welcome back to the channel, and welcome back to another backtesting session as we trade the interest futures 2022. Okay, so we're going to continue where we left off. Obviously, the Friday, which you can see on screen. Let's just go to full screen mode here. Was profitable. We reduced risk after taking a trade, taking a loss. Sorry, a loss that, in all honesty, could have and probably should have been prevented. Prevented by. I don't know why I haven't got the. Let me just. Where's that gone then? I think it's that. Is it that? Oh, let's check. Yep, I think it's that. With YM inside of there. Yep. Let's go back to the hourly. Yep. That's the 15. Somehow I thought the trade was between ES and NQ. I might have to rewatch that, but nonetheless, I think let's just go with YM. Key swing was here, so that was the OB, and then we got in on the propulsion candle. So ultimately, we could have got in down here, prevented the loss. We would have probably. Oh, I know why. It's that old chestnut, isn't it? No wonder it. Yeah, there we go. So it was with. It was with ES. So if we look at this low here, this candle, that's the OB. That is the OB. This is the propulsion candle, or propulsion block, there, if you will. Price trades out, confirms the order block, trades back in. This down close candle becomes a propulsion, and that becomes also a propulsion block as well, because it trades into a previous order block. But anyway, this low, this candle and this low, that is the low, right? So outside the trade execution window, we could have used the propulsion block, but either which way, we still have to maintain this low. This is the protected low, and that's where I fell down. I used a higher low, got taken out. Got taken out because I trailed up the stop, but it's neither here or there. The fact is that that was the low that should have been referenced. Wouldn't have been a large stop loss, especially when you're in consideration where is the next H4 inflection point. Well, it was actually the previous day's high, so the likelihood is price was going to the previous day's high if we were going to see a reversal. So yeah, that in itself would have been what should have been done. Trade taken off here. Obviously the propulsion block wasn't confirmed on here, so that order block is still maintained. We could have taken this one, and if we take that, we still have to maintain this low. That is the key swing low if we take this order block here. The reality is we could have still continued with that one. That's the propulsion block on ES, but it's still inside of this order block, but it is the lowest close. That's why we could have taken this, but we still have to maintain that low. So couple of errors on my behalf there. Would have probably still been in the trade just by a smidge. But anyway, we keep it moving. So we've come to the end of the week. Heading into the following week, we have pretty much no economic news. We've got a couple of days where Fred Chair speaks, but outside of that, there's nothing. So the game plan going into next week is primarily we are going to wait for equities open, the volatility that's going to be injected from there, and then we'll look to engage the market at any point after that. So that's going to be the game plan. But first and foremost, what we're going to do is we are going to clear the charts because we're going to start a new week and we want to take a new perspective on everything. We're going to go to the hourly so we can forward now to Tuesday. As you know, we don't trade Mondays, so let's forward. Be interesting to see how high. Let's have a look. Oof. He didn't stop, did he? God. Didn't we just leave some money on the table? But what was the aim? The aim was primarily hit a trade, mitigate our loss, our losing trade, which we did, and we still walked away with profit. So we've got to look big picture, and there'll be plenty more trades that we can engage with. Right, so we're going to go to next day open. There we go. Now we're going to go to next session.
Sorry, I'm having trouble. Please try in a little while.
I have no idea why my Alexa is doing that. Okay, so we're here. We'll stop here for now. Let's go out to the daily. Let's get a. Now this obviously this stream is going to take a little longer because we need to do all of the marking up. So it was Friday. Okay. So we've seen all. That high could be of interest. Just going to mark that up. Okay. Now I'm primarily looking at these four as targets more so than anything else. Let's get the microphone correct. Okay, so we had cracking correlation at the lows here that initiated higher prices. I'll mark that up just purely from a visibility standpoint. That's fine. Monitor's going to turn off. Okay. Let's have a little bit of coffee. Okay. Right. So let's go out to there. Okay. Not marking up the high because this is the Tuesday candle, so we don't know yet whether we have a swing point. I will be dropping down to the H4. I don't think there's really anything. Obviously got a range low to range high here. Although this can have that. Right, so let's go to the H4 and see where we're at. Okay, so that's key. Okay, we'll keep that in for now. I'm not going to say whether it's being confirmed yet. In fact, that kind of answers the question for me. Okay, so now let's just take a look at what we've. So from Monday, we've established this low and this high. This high, that low. And I'm just going to mark the low. There is a high here, but let's not worry too much about that. We're also established should we go open? We obviously have this aligned H4 imbalance, which I think that's important. I know that it sort of overlaps with the daily, which just adds to the significance of that POI, or that area, if you will. Okay, so why is this important? Because if we trade and close below this level, then it's safe to assume we could be seeing lower prices. But for now, it's important to note the area. Okay, so just going to do that. Good. Okay. So we do have some other lows. I'm just going to pop out to the daily just to. So these are just previous days lows. Obviously, that's the key low from a daily standpoint. We'll just mark that in for reference. Okay. And we'll appropriately reference that now. Okay, so let's just have a look at the economic calendar a second. Yeah, so 1, 2. Okay. Well, let's just go with what it's referenced as. Okay. Okay. So we can see some of the key liquidity pools. For instance, here would be a potential draw. So it's going to mark okay, so we want okay, so that's from previous week, and I do want that referenced on the others. I think that's the low there, NQ, and on ES that would be the low there. Okay, and finally these liquidity pools. I think if we were going to the high, then it's quite obvious that we would be purging both sets of liquidity pools at the high. I think that would be quite obvious. Okay, so that's where we're at. Okay, now that is because it is Q5. Which is essentially the previous week's high. Just going to do that. Now we did reference this, but mean? Going back weeks. Let's just go out to the weekly. Okay, so it's not. Okay. Yeah, that's just an old high daily. Don't need to do too much with that. So daily fine, H4 fine. Okay, I think that's good enough in terms of I'm going to get rid of that just to make it easier. There we go. And trade it down into the inflection. So we have rules for that. We need to see if the market wants to trade to and through. It hasn't. So that would suggest if it finds support here, maybe we see a breaker of some sort or something. Support the idea of higher prices. But we're gonna get into our analysis first. Interesting one. Oh, sorry. There we go. Okay, so let's delve into this. Tuesday the 22nd. Okay. So IOF. So as far as I'm concerned, relative to the daily, look at the daily. We can look at the weekly as well, but I'm going to look at the daily. This is to the upside. And why? Well, a number of different factors, so let's get into that. So relative to the daily time frame, IOF is to the upside, following the high time frame displacement, which was initiated by the high time frame cracking correlation at the lows. Okay, it's the first thing. Bear with me. I've noted how the market has manipulated old lows whilst displacing through old highs. So that's another point. In addition, I have also noted how bullish fair value gaps are being repriced and rebalanced, or being left unfilled, with the market showing a willingness to reprice higher. Okay, so looking at the daily, unfilled, currently unfilled, higher prices. Okay. So now we want to drop to the 4 hour. Okay. So again, uh, relative to the H4 time frame, this is also supporting the idea of IOF being to the upside. Bullish fair value gaps. So we can see bullish fair value gaps supporting high prices. I'm not going to write the whole statement again. I've wrote that for the daily. High prices, and we've obviously seen old lows being manipulated as well, and old highs being displaced through. So again, you know, by all means, detail that out. Bear with, I just want to see where did the, I think it was here, wasn't it? Was it here? Yeah, I think it was here. At this old low. Yeah, I just want to, I'm just going to mark this up because I like to see where old but most recent cracks and correlation occurred. And this one occurred in here. I know it's added more lipstick to the chart, but just for me, I like to see where it happened because that indicates a high probability liquidity pool should the market reverse. Okay, better. Okay, so ERL, IRL. Let's go and have a look at this. So again, I'm going to venture out. I will actually take a. Just want to take a look at the weekly. Okay, that is fine. Might show up on the weekly, but okay. So pretty much market symmetry as the market reprices to the upside. So nothing clear in terms of the weekly time frame. go to the daily. So Kraken correlation here. Could argue here. True market structure shift here. Why? Because this high formed inside of this SIBI where the market rejected and traded lower. So once this was purged here, in my opinion, is true market structure shift. See higher prices. Yeah, I think external range liquidity is the draw. Now, could we see the market trade down into this SIBI? Yes, certainly can do that. Sorry, BISI can do that. And then reprice higher. Yes. So that is something that I would be paying attention to. But I do think the market is seeking external range liquidity. Now we have traded above external range liquidity in relation to this, so let's just mark this out. Okay, so if we take that same level, transpose it on the other markets. Okay, so we've taken external range liquidity. So if the market, has purged external range liquidity, therefore my immediate attention turns to internal range liquidity if this is coupled with a high time frame Kraken correlation at the highs. And to be fair, it'd be perfect to do that, because then it means that we engineer liquidity above this high. Up above here, we have this large liquidity pool up here. So, but if it doesn't do that, then we could ultimately just see a continuation of high prices, which is absolutely possible. Especially if the H4 structure, in terms of support from imbalances, holds true. Then yeah, if it holds true, then the reality is there's no need to trade down into that BISI, but I suspect the market will. So that's what I would elude, especially because of the indecision candle and the sort of unconfirmed / confirmed, because certain markets have confirmed that. That could indicate that the market's going to trade down there. with me. Okay, let's continue. So we want to go now to SPs. Where we should now sort of reside on the H4, to be fair. So, as we've previously stated before, we've noted the clean and clear swing points above and below the current price reference in the previous day's high and low. This is also where near-term liquidity would be residing. And should there be an high time frame cracking correlation at either of these two key price levels, this would support a high probability trade idea. Okay. Because, sorry, let me say that. Trade idea because they reside either side of the 2-week open. Okay. So, TO. So let's just get down into the excuse me. So currently all members are below. Currently all members are below their respective true week open. This currently could support the idea of higher prices. Now again, this is not guaranteed or anything of that nature, just currently prices below the true week open. So if we were to look at, for instance, on ES, the range, and NQ, take those two, for example, we can see that they're kind of marginally around the same. Certainly, YM is certainly lower within its range, but it's roughly around equilibrium of that range. So, you know, they could ultimately still trade, just continue to trade above, which would be permissible because we've seen the support from the bullish fair value gap. So, cracking correlation. Okay. So, as far as I'm concerned, I noted this as unconfirmed. However, it is important to go and check the hourly. And if we check the hourly time frame, if we check the hourly time frame, this has been confirmed. Now, you know, naturally speaking, I prefer cracking correlation between ES and NQ, but needless to say, Now, again, just something to note, and I am going to note this now. Just bear with me 1 second, folks. And we're back. Okay, just a little bit of coffee. Okay. So let's talk about this Kraken correlation at the highs. So we've seen the Kraken correlation between ESNQ and YM. That, to me, again, could just support the idea of trading down into this 4-hour inflection point, which is the inversion fair value gap. Sorry, inversion fair value gap. The bullish fair value gap, to then seek support here to continue higher. So this, to me, could well be a delivered Kraken correlation. It's quite possible, especially being as how close we are to this large liquidity pool here. Okay, so that's something to note. So that's something I'm going to note now is I've noted the high time frame Kraken correlation at the highs between ES and YM. Yes, and YM. However, this Kraken correlation could well have initiated the near term move lower into the bullish fair value gap before the resumption of IOF. So hopefully that makes sense. Again, these are part of my rules. I look to target H4 inflection points because as far as I'm concerned, H4 inflection points are some of the most powerful but daily inflection points as well. Obviously going to be stronger and so on and so forth, but in terms of a continuation, H4 inflection point could be the framework of seeing a change in the state of delivery. So what does that mean in terms of Kraken correlation? So we've noted that. So ultimately, I will be looking, or I'll be looking to determine whether the high time frame Kraken correlation at the highs supports price to invalidate the H4 inflection. So because we've got a consolidation here, we could still see this push lower. I mean, yes, it's traded into it once and rejected, but it rejected and didn't exactly go and take out the high. So we're sort of in between two scenarios, if you will. We could see it trade lower, create a Kraken correlation at the lows, and then trade higher, or we could see a close below here. Now, if we see a close below this key level in here, that will kind of suggest to me that we're continuing lower. Okay, so I'll be looking to determine that. Alternatively, I would want to see a new high time frame cracking correlation form to support a trade idea. Okay. Right, so before we get into game plan mode, let's go and have a look at what the hourly time frame is suggesting, supporting, if you will. So I'm going to put that all here. Just want to get everything nice and clean so I can see what I'm doing. See, these relative equal highs here, to me, look like they want to be taken. Now, it doesn't mean that they'll be taken immediately. It just seems to me that they want to be. Right, now, what I'm going to do is just move on to the next session. Oh. Interesting. Right. That's fine. That's fine. So, we've got symmetry at the lows. We will have to go to the M15 time frame at some point. But let's... okay, now because I've moved price on, I just want to check the H4. That's fine. Okay, so the H1 liquidity pools, that's fine. That's okay. Sorry, I went a little bit quiet there. I was just, I think I was daydreaming actually. So what we can see is this high here. That's New York PM session from previous. We don't need to worry too much about those yet, shall I say. Although that's the, let's just make sure. Yeah, that's the high there, PM session high. Can't get these to. I mean, like, for some bizarre reason, you can't get into the settings of these, which is kind of annoying. Let me give it one go. One go. Delete pane. Give it one go. Yeah. Didn't want to know. There is a way to. I think there is a way to do it, but doesn't want to know. Yeah, because the problem is it's not up here, so you can't get into any settings. It's down. Oh no, here we go. We've got some settings. Great. Yeah, so the issue is, as you can see here, we're not able to select the time, as in down here. We can't do that. So yeah, disappointing, right? Alrighty then, so let's continue, because we don't want this video to drag too long. Right, so we've got two imbalances which are important. Got this high here which hasn't been purged. Okay, let's get the two imbalances in play. Now it's going to present more lipstick on the charts, but again, kind of important to have them here, certainly for me, just so I can determine exactly what price is doing, and then at the point of when they become invalid, I just remove them, if I'm honest. Simple as that. Okay, so we do have potential crack and correlation there, which would want to go and check that it meets all the necessary criterias and so on. So we can go and do that. So I think we do have a liquidity pool up here, which I know it's in close proximity, but for the interest of completeness, let's just mark this up. We'll just mark it currently as a H1 because we don't know yet whether it's the high of New York. Highly doubt it. And we don't have that same there. Okay. So, right. It's time for us to determine our game plan. I actually just want to go and check the M15 and M5. That's interesting. Just want some tea. Right, okay. Different grades. And certainly can. I'm not supporting the idea personally. Um, yeah, that part is pretty. Anyway. Right, okay. So I'm going to go back out to the hourly for now. Certainly appears the market's looking to reprice higher. So, game plan 1. We've seen support at the H4, and we've seen this displacement higher. So it's given us an indication of the market wanting to trade higher, right? So 1, if the market which it has technically, but there are elements of it that I'm not happy about. But if the market trades down into the BCH1, which it has, this could plus low time frame SMT, this could set stage for higher prices. Now ideally I'd prefer to see that with ES and NQ. However, something that we just need to caveat is the fact that we're looking for moves after the equities open. So although this has formed this could run now. That's fine. I'm okay with that. We want to frame the trade in conditions which are favourable to us. If we take this trade prior to equities open, yes, we can. There's no reason why the market wouldn't consolidate prior to that. We're in this trade. We can't take our position to break even or anything like that. We get the equities open volatility, takes us out, and then the market actually presents the true framework and then continues higher. So we just need to be a little bit careful there. So yeah, so that's that. So prices. So I will set the caveat at the end of this. So that's 1. 2. I mean, the reality is that's 1. If I just go out to the 15, I just want to check. We had not ideal. Definitely not ideal. Breakers here. Technically, that's the breaker. We have closed above the breaker. Okay. Okay. So the other alternative to that is a cracking correlation at the highs. Ideally the previous day's high. and then we see lower prices. Now I think that that's highly, it's not highly unlikely to form, but it's just, to me, ES seems highly likely to go and purge its previous day's high. NQ seems highly likely to do likewise. Let me just get rid of these. Whereas YM does not seem likely that that would be the case. So we could see high time frame cracking correlation at the highs. Okay, so if we see high time frame cracking correlation at the highs, this could support the idea of lower prices. And ultimately, if we, I'm going to put this as 3. Actually, no, I'm not going to put it as 3 yet, because no, I'm not going to put it as 3. If we see a cracking correlation at the old high daily, I will probably want to frame something, a more near-term cracking correlate before seeking lower prices. I'm not going to just get involved because of this being a potential key level. I think it's relatively outside the scope. I think that liquidity pool goes back quite far, so it's not something that I would want to do. So anyway, let's drop down to the 15 for now. We're obviously waiting for equities open, so we've got some things to watch. We're going to set this to the 1 minute. Let's play. That. Okay, I just want to get rid of this. And get rid of this for now. And that. This is now interesting because what we have, I'll leave it in red for now. We can change it. We have seen an M15 purge of liquidity here, and we've seen another one here. So I'm just going to mark that up. But again, we're not at equities open, so let's not get ahead of ourselves, right? 15. Okay, so we're going to continue. I know it kind of, we're not even at the news embargo yet. I mean, we're only at 7 o'clock, so we've got a long way to go. So let's go. In fact, let's just change that to 5 minutes until at least we get to the news embargo. And again, if the move happens before, but before, then so be it. NQ trading down into the lower. It's interesting. Okay, let's drop out to the hourly. So this has been violated, so we can take that off. Let's get rid of that. Let's get rid of that. Okay. Tiny BPR. We're not at right, we're going to drop down to the 1 minute now. Just going to play it forward before equities open. News embargo. Okay. Still waiting for equities open. We'll pause before that level. Does NQ still want to trade lower? Market certainly appears. Alright, let's drop down to the 5. Let's see what we have here. Just drop back out to the 15. No, not the 15, the hourly. Potentially, we've got this. Okay. Disregarding YM for a second. Okay, so that's the low. Technically, the order block is all of this, technically speaking. Okay. Just want to drop back out to the H4. Do we have a H4 reflection? We don't. That's fine. Okay. Back to the M5. Let's see what we've got. So nothing evident at present. No displacement, nothing. So potential displacement occurring here, but as you can see on NQ, no displacement. So we're just going to continue to wait. In fact, just want to note 15 gain, as you can see, no imbalance in here. M15 order block is quite large, so we'll wait till equities open just to give us a better idea of what the market's doing. We've seen no displacement. Let's see if that gets confirmed. Okay, so we have M5 displacement now. So we're going to mark that up. Still slightly earlier, and what could potentially occur here is the market moves without us, and if that happens, so be it. Like, there'll be plenty of opportunities. As much as we want to, make profits and money and all of that sort of good stuff, you've got to still act responsibly, right? Like, you've still got to do these things. So our order block, quite clearly, is all of this. That's the M5 order block. Okay. And just to get the aligned candle would be there. So let's take that. I think I said it was that one, which it is. Right. So again, still quite early in the process. If this goes to purge, then it goes to purge and we sit on the sidelines. Does look rather bullish, not going to lie. But okay, so look at how this is getting close to that level. We're at now at 905. Just want to see where the M15 order block is now, which is quite high. It's here. We do have a... Oh, no, we don't. No, we don't. I was going to say we have an M15 BP... Well, we do have an M15 BPR on ES, and that could give us a bit of a clue as to, is the market looking to go higher? If that supports price, NQ may trade down and reject. You know, if we're going to see higher prices, then in theory we don't want to see price trade to this level. Right, so let's just bring that out like that. Okay. Still plenty of room, certainly on NQ. Going to go back to the 5 minute. Let's see. Again, we're working towards equities open. Okay. It's trading lower. Okay, so ES has tapped the BPR. NQ is obviously traded into the imbalance. Do we see a close below this imbalance on NQ? Or does the bodies of the candles respect? Okay, looks like it's trading. Okay, so the bodies of the candles. Oh, not sure why that went further. Just going to click across now. So we're not at... Okay. So we're seeing that rejection. What time are we? 20, so 10 minutes away from when the market is reacting and moving away. And what we could potentially see at equities open is this move away. And there you go. So what's likely to occur is now, well, certainly ES going to the highs. The BPR supported price. The volatility from equities open was far more aggressive on NQ. So just going to note that is the bullish order block. M15. And interestingly, the equivalent of it is here, which has been traded to already, which is this candle. So yeah, the market never traded above this candle here. So to me, the order block was this one, and oh, I think this is just a case of unfortunate. Okay, so 5. Let's click forward and see what we get. Oh, and look at that. See, now this is problematic, although it's shallow, so you would anticipate a deeper run. It is. I would have much preferred had that not wicked above, because technically speaking, all you need is that wick above to set the stage for lower prices. Although, like I said, I suspect we will see a deeper run above that high. So we're on the M5, yeah, okay. And there we go. And I think, you know, it's playing around with your emotions, and then bang, you get that. So it's one of those. Could we have got in prior to equities open? Yes, but it's far more riskier doing that. You know, some people say use the volatility of equities open. Well, that volatility on NQ could quite easily have come down here, taken that out, and then repriced higher. And then the question would have been, how would I re-engage the market? And the reality is, well, you'd have struggled to. So again, another sort of move and model that we framed. Game plan was correct. Just unfortunate that the essence of the move occurred before. So let's continue. Expect NQ to, there you go, and NQ's now hit target. So that is a shame. That is a shame that we were unable to get in tune. Now, yes, if you go to the 1 minute, there'll probably be a 1 minute fair value gap in there, and you know, there it is, and price traded down into that, and away we went. But that's not, you know, what we're, excuse me, it's not what we are looking for. We were on side. We wanted to wait till after equities open for the volatility injection. Unfortunately, the move had began. You know, we used 1 minute candles, so by the time it traded down and sort of back up, I guess it's one of those in the sense, could you have got in here wherever that candle was? You look at it and go, could I have got in here? Stop loss there, aimed for 2 hours. Let's have a look. Let's see where price goes. I mean, I wouldn't want to do this, so that closed there, but I think at some point it was around here. So there's the low that So it's certainly a 1-to-1 to there. 2-to-1 is there. Let's see how expansive NQ wishes to be. Well, I think we're in luck because look at ES wanting to trade up to that old high. Oh, look at that. Now, the reason why I wouldn't take this is because if we go to the M5 order block, it's delivered to R, and I mean the reality is it's likely to trade higher because it'd be very unlikely that NQ, sorry, YM is just going to stop there. YM is likely to trade through, but like I said, I wanted to get in at the inception of this. Trading back down to that after price has delivered all of that and taken out key liquidity pools. Not that interested. I expect NQ to continue higher, but we'll see. There you go. There you go. Yeah, yeah. It's one of those. When you see this, you're anticipating ES to trade above there. You're seeing this come down into here. Could we have taken the trade? Yeah. I mean, it hadn't delivered 2R, but it had traded above key liquidity pools. If we're looking at this here, traded all the way down into, guess, this imbalance in there. Excuse me. Let's look at the M15. I mean, that would have been a worry, but it delivered. So, you know, we can put that down to potential mistrade. I didn't like the fact that we'd taken all this liquidity out, but on the flip side, we had traded through, closed above, so that would support the idea of a continuation of higher prices, and lo and behold, that's what happened. So yeah, unfortunately, I mean the reality is though, this isn't the entry. I just put that there for reference, but the reality is that wasn't the entry. The entry would have been, let's have a look, NQ. Well, it traded to, it would have fallen short of the M15 OB, so the likelihood is we wouldn't have got involved. We wouldn't have been tagged into that trade. So one of those. We'll sit and wait for a new opportunity. But I'm going to end this session here. So, I mean, the key takeaway is we were correct with our game plan in terms of what we wanted to see. Unfortunately, the price moved prior to equities open, so you know it's one of those that we unfortunately miss. But the takeaway here is that we're seeing the market well. Our models are giving us clarity, presenting opportunity. Again, it's one of those. Should I have taken the trade before the market? Well, again, if I was going to do that, let's just hypothetical, right? Let's hypothetical. Yeah, so yeah, so if we go for hypothetical on the M5, the market had done a lot of what we wanted to see. We would have prepared our trade on ES, created the higher low. So if we look at equities open, we've traded down into the order block. It's one of those where this could have, I mean, I guess if I'm going to be pedantic, looking at it, we called the high time frame framework. We said price is likely, one of them is going to have to trade to the previous day's high. So if one of them is going to trade to the previous day's high, which one's more likely to do it? It was ES. It was closer in proximity. Therefore, we could have taken the trade, seen the volatility from equities open, which would have been bosh. Trade would have been moved to break even because we would think, why take the risk? The market then displaces higher and delivers. So in hindsight, that's something to note, and I will note that in terms of price action observation. In fact, I'll do it now. Price action observation. Where there is no news and a reliance upon the EQ open volatility, if the trade idea supports higher prices, in this instance in brackets, if reliance upon equity open volatility, if the trade idea supports higher prices and has not yet delivered, a potential trade on the asset which forms the higher low can be considered. Now, I would like to see more examples of that, because I think in most cases, and I think the question you've got to ask yourself is, okay, well, if we had equities open and the market traded down into here on equities open, would we have taken the trade? So the question we've got to ask, or I have to ask myself, is, we've got the framework, the market is traded down to our key price level prior to equities open. Yes, it's risky. Should the market come down here and take us out, what are we likely to do? Wait and then re-engage, right? So why would we not do the same thing here if we have executed the trade to our model? So the point I'm making is say we hadn't traded back down to this order block. Let's just extend this out just so you can see it. Say we hadn't traded down to the order block prior to equities open. Equities open occurs, the market trades down into the order block. Do we take the trade? Yes, but the volatility could still continue and take us out. So the point being is that this is a mistrade. In essence, I had convinced myself to wait until equities open volatility, which is fine, where we could have taken the trade on, in that case, on NQ. However, if we take the trade on the asset which made the higher low, which in theory is the leader, then in theory this should be protected, this low. We've taken out the short-term low. This low should be protected, and the market in theory should not go back down here. So we can look at that as a mistrade, which is a shame, but it's something to take away. So on that note, I'm going to leave it here. Hopefully you found this session extremely useful. I have. There's a few key nuggets, takeaways, and so forth. Again, if you've watched all the way through to the end of this, thank you. Brilliant, fantastic. If you wouldn't mind just giving me a thumbs up, maybe subscribe to the channel, and guys, I'll catch you in the next one.